What's up, guys? Welcome back to DCA. So what we're going to do tonight is take a look at a metric which is going to offer us a different perspective on the normal outlook that we talk about on this channel. Ever since December, we have had a strongly bearish, biased view of this market because of the fact that inflation has been running rampant. We've been seeing inflation rates of 8% plus. We've seen the Fed take a stance that they are going to be pursuing a quantitative tightening policy, pulling money off of their balance sheets as we go forward, which is going to have, in essence, a negative impact on the price of equities and risk assets such as Bitcoin. We've seen the interest rates rising. We've seen a lot of global uncertainty. And as a result, we're seeing things like the DXY go on a run. So reaching up to 111 today, breaking above that 110 resistance that it's been sitting at. So we have had the stance on this channel that the price of Bitcoin and the price of the cryptocurrency market as a whole is very likely in for a really rough time ahead. And sure enough, we've seen the prices down around 73% from where we were at our all-time high back in November at 69K. So what we're going to do today is take a look at a metric which may suggest that we have reached a market cycle bottom. With that said, I'm not going to suggest to you that we are at the bottom, because ultimately, anytime I'm performing analysis, I'm looking at both the macro picture and at the technical picture within the crypto market itself. We have had a strongly biased view of this market that we are in a bear market and that we will be going down. And we've been saying stuff like this all the way since 50K. But as you get lower and lower and lower, the potential that you've reached the bottom is always slightly increasing. And so now we've reached a point where technically, and when I say technically, I'm referring to the technical view of the market, where there's a lot of confluence. So we at least need to start looking at the market from the perspective that the possibility that we're at the bottom is worth considering at this point. Because, when we were at 50K, it wasn't worth considering that we were at the bottom, very likely. Same with 40K, same with 30K. But as you start to drop below that 30K level, a lot of these different factors are now suggesting to us that based on the historical price action of Bitcoin, that we're at the bottom. Now, the markets can always react in unique ways to the macro circumstances. And that's why we can't just simply discount what the technical analysis of Bitcoin is telling us. So today we're going to look at an on-chain metric, which is very interesting, and the results of this metric are very interesting. And I'm going to talk about this today, and I'm going to show you why this metric suggests that we could potentially be at a bottom now. All right. So what we're looking at here is the net realized profit or loss. Essentially, what this is saying is all of the Bitcoin that moved on the network on this particular day, it looks at where they moved at what price. So for instance, we're looking all the way back to 2011 here, and it says, well, right here at a Bitcoin price of $23, where did the coin move at? So, if it was bought at $1 and it moved at $23, it made a net profit, right? And we're talking about one coin. So that coin made a profit of $22, right? Because the difference between the price where it was sold, 23, and where it was bought, which was $1. So you profited $22 on every coin that you sold here. And so this looks at all of the coins that were sold and says, what was the net on this day? Was it net positive or was it net negative? And you can see a very predictable pattern here. At the top, people that are selling coins, these are going to be very profitable days, right? If you bought a coin at any single day and you're at the top and then you sold it, there's going to be a large profit on that day. Conversely, when we reach these market cycle bottoms, we see people who are capitulating on these days, people who are selling as the market is crashing. There's going to be losses on those days. So these are people that bought the top and then they panic sold as the market is trending down. And so we can see that in bull markets, the market is strongly positive, and in bear markets, it's strongly negative. And we can just look at each cycle. We see a very similar pattern. Here's 2013. There's lots of profits being made as we're running up to these higher prices. And same thing during the second part of the 2013 cycle, the second peak. This is that double peak cycle, recall. In 2017, the end of 2017, as the price was rising up to around 20K, we see lots of profit into the bull market. And then you see that the network, people are selling on the network at a huge loss all through the bear market. If the network is net negative, that means that these are coins that are being sold or moved on the network that were bought at a higher price. So, when we came all the way down here to 7K, these are people selling at a point that bought the coin at a point that was higher than 7K. And you see the same thing here in 2022. Lots of profit right here throughout the bull market. And now we've come into a place where you're seeing lots of panic selling, lots of capitulation. They don't believe that we're at the bottom. They believe that there's more room to go. I took this data then and just added all of the days together. So this gives us the total sum of the profit or loss on the Bitcoin network. So with that data, if we add every single day of Bitcoin and we look at whether it was net positive or net negative, look at all the profits and all the losses, we get this yellow line. And this yellow line shows us how much profit has been made on the Bitcoin network. And so we just have a running total of the total amount of profit. And we can compare that then to the market cap. We see that the total profit on the Bitcoin network actually very closely mirrors the market cap. We can see that at every single market cycle bottom, right at or right near the bottom, the market cap of Bitcoin touches or goes just below the total amount of profit on the network. So back here in 2011, we saw the market cap dip down to around 16 million, which is almost exactly where the realized profit was, the total realized profit. In fact, they were nearly identical here. Back here in 2015, at the bottom, in January of 2015, what did we see? The market cap dipped just below the realized profit. So you'll see that the profit peaks out here right near the end of the bull market. And then as people are continuing to sell at a loss as the bear market drags on, that is where we see that the market cap eventually comes down as this is slightly falling. So we kind of peak over here at around 3.7 billion. And then the market cap actually falls below the total amount of profit. And you see the same exact thing happen in every cycle. So out here, after we had this massive capitulation event in November of 2018, we see the market cap fall below this realized price right here. And so you've seen this exact pattern play out over and over and over again. And where are we at now? Well, yet again, we have reached a point where back here in June, when we came down all the way down to around 17.7K, we have fallen below this total amount of profit on the Bitcoin network. Identically what we've seen in every prior cycle, where the market cap comes down, the network becomes at a net loss. In other words, the market cap is less than the total amount of profit that has been made. And so these are reached at points of maximum capitulation. So each time that the market cap comes down to this total amount of profit accumulated on the Bitcoin network, that is kind of at the point where we have exhausted all of the sellers on the network. There's just not really anyone left to sell. It brings up the possibility we are at that point yet again. And structurally, it looks very similar to the way that it's looked in every prior cycle. So we are just below that level, but it's worth noting that in the past, this has indicated that we are in fact at a bottom. And so this is a significant level to continue to watch. Now, I'm not going to tell you that just because this has happened in these prior cycles, just because we've seen when the market cap reaches the total amount of profit on the network, that indicates that we are at the bottom now. I'm not going to say that. What I will say is the macro picture is exceedingly difficult to look at and say that because of this, and this, the interest rates, the Fed, quantitative tightening, inflation rates, global uncertainty, DXY. There's so many different factors to analyze in the macroeconomic picture. And the way that the market reacts to them are sometimes not obvious. And you can see the market turn around either well before or well after you would have expected it to. And so you have to really look at all of the data and you have to understand everything, and you have to accept the fact that there is uncertainty that you accept when you start to approach these markets. When you start to invest in these markets, there is a high degree of uncertainty, and we can't always know what information is going to be important. And so looking at all of it, and at least considering the fact that we may not believe that the market bottom is in, But you have to understand that there are numerous indicators out there, particularly within the TA, and we're talking both price TA and on-chain TA, that are suggesting that this is in fact a market cycle bottom based on everything that we know about Bitcoin, based on the 12 years of price history for Bitcoin. Now, at the same time, you can also say that liquidity factors are extraordinarily different now, and therefore we have to discount what has happened in the past, and it's no longer pertinent, and therefore we expect that this price structure that we've seen building for 12 years will break down and we'll start to enter into a new market cycle or market phase for Bitcoin. And those are both perfectly valid arguments. So even if we do break down from here, because recall, Bitcoin has never experienced a true recession before, nothing but a blip that we saw back here at the COVID capitulation event. So we don't know how Bitcoin is going to react. We can hypothesize that it will likely not be a positive thing, and you'll very likely be validated in that belief. Nonetheless, by dollar cost averaging into the market, getting increased exposure as you continue to move down. Even if we were to break below this price and then start to head, towards some of these lower levels that people never would have believed that we could get to, if we went down to 12K, then you're buying in these lower ranges. And so even if you never got back to this prior all-time high, and that's not something people want to hear, but it's always something you have to consider the possibility of. And so if we never got back to those levels, using a dynamic dollar cost averaging approach, and you're buying as you're going lower, you can still be extremely profitable as the natural corrections and expansions of the market occur, and as you start to move to higher levels. So let's suppose that we did drop down to 12K and never got higher than, say, 50K again. Well, using something like the DCA index risk model would still yield results that would suggest to you when you're nearing a market cycle top. And so you would be dollar cost averaging into the market as you move down, as we potentially moved down to some of these lower levels like 12K or wherever it may head to. And it would still be able to identify, even if it never got to an all-time high again, where the market is very likely overrun and at a place where it should be sold, that you should be dollar cost averaging out of the market. So ultimately what we're saying is there is a high degree of uncertainty in this market. And a lot of the macro level analysis that we do every day on the channel suggests that there is a lot of downside risk. But I want to present the other side of the coin as well, and not just merely give you, my personal beliefs, but give you all of the data, provide you with all of the data so that you can look at the market and decide for yourself what's important. I can suggest to you what I believe is important, but I think there's also a lot of worthwhile information to be had by analyzing everything. So a lot of this on-chain data that we've been talking about for months and months now is suggesting to us that historically this would be a market cycle bottom. And in some of the coming videos, I will talk about a lot of the technical analysis. I've been doing some consulting with some people that work with technical analysis much more than I do on the price action side, and I'll be presenting that. So you can look forward to that in some of the upcoming videos. But with all that said, we're not going to abandon our primary thesis that regardless of what the charts are telling us at the moment, we have to appreciate the macro picture and what that is telling us, because ultimately we don't know which of this information is going to be the most important. So we have to continue to watch, and we have to continue to remain vigilant of everything that the market is providing us with, everything that the macro picture is providing us with, all of the TA. What is it telling us? What is the on-chain information telling us? And so right now, there's a high degree of uncertainty. We can strongly believe that the macro is what is going to matter, but we simply cannot ignore things like this, suggesting that, hey, if you look back here, if you look back in this cycle, if you look back in this cycle, this is all indicated that you are at the bottom. And so, we have to look at all of it, guys. So that's going to be it for this one. If you guys like this type of content, hit like and subscribe. And until next time, as usual, see you.